Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to have with me Ivan Bebek of Cayden Resources. Cayden Resources trades in the Toronto Exchange under the symbol CYD, and it trades in the United States under the over-the-counter market under the symbol CDKNF, and that's where I purchase my shares, and I can tell you I'm a very happy shareholder today, and for reasons that will become apparent to you who may not be familiar with the Cayden Resource story. In just a couple of minutes, Ivan Bebek will tell us all about it, but the company has 49.8 million shares, roughly speaking, outstanding. I saw earlier today trading at $3.15. I picked it up in my newsletter to $1.26 or something like that. So my subscribers are quite happy for the most part. Market cap of $157 million, but the real story here is that Agnico has made a friendly offer to buy out Cayden Resources, and that's at something like a 52% premium over the average share price over the last 60-day period. Well, welcome, Ivan. It's really good to have you back with me again.
Thanks, Jay. Thank you very much for having me on the show now, and I'm really glad we met when we did, and you took an interest in us both as an investment and as an expert opinion, because you really do have a good eye for good assets and good management. A lot of our earlier discussions, you complimented certain things about the company that were being done very well, and it related into a very successful deal, which we're very happy about for our shareholders. And so thanks again. I appreciate it.
Well, thank you, Ivan, and I can tell our listeners that, there are a few CEOs that I have come in contact with over the many years that I've been involved in this sector. Probably Ivan was a grade school kid, if that, when I first started covering this sector. And the one thing the common thread that runs through successful CEOs, and Ivan is one of them, is the ability not to be so egotistical that you can't give credit to other people, and the ability also to see the big picture and what is needed to shape up a company and to develop a gold mining company, for example, or whatever the sector is, but especially in the mining sector. It's a very difficult sector, and the amount of the different kinds of talents that you need and skill sets that you need to make a company really work and successful is very broad. And Ivan, I congratulate you on your ability to pull together a strong team with that diverse skill set, and also your ability. I think one of the most important things is the financial expertise that you bring into this market and into your companies, because the ability to finance these companies and to structure the financial structure of these companies is essential to building a company, raising the capital that's needed to put in the ground. And so congratulations. Well, the news came across, of course, last week, I guess it was, that Cayden, that Agnico Eagle and you, Cayden, has agreed to a takeover. Can you tell our listeners a little bit about tell our listeners about the deal, if you would?
Sure, absolutely, and I'll get right into it. It's a ratio deal, and I think a lot of shareholders aren't quite familiar with what the ratio means. Each Cayden shareholder will get 0.09 Agnico shares for each shares that they own of Cayden, and plus they'll get a 1 cent cash component, which is primarily for tax reasons with Canadian investors. But the ratio is important to us. Jay, we didn't want to sell this summer. The deal came as a surprise, although a lot of companies were looking at our asset, and we knew we were onto a really spectacular project, and I think the Agnico will do very well with it post our hands. But ultimately, the ratio gives our shareholders a chance to reap the benefits of a better gold market, which we think we're heading into. So we get to enjoy being long the gold space, and what that means, if you have a share of Cayden today, it's worth about $3.50 under the current ratio, as you pointed out earlier. But if Agnico goes halfway back to its old high of about $100 a share, if we go halfway back towards that, we're at about $70 Agnico per share. That would be $6.30 Cayden. And the real time frame to experience that conversion or that price ratio and that valuation would probably be in about, I think the market could turn within the next 12 months. If we did not sell to Agnico today and we kept drilling and financing and working on our project, we'd have a lot of exploration risks to carry forward, and we'd be absolutely in the market risk category. And, we'd probably get up to the $6 range. I'd be very bullish that we could achieve that from the project, but we wouldn't have an immediate sale to give our shareholders and alleviate all the risk that's involved with exploring, right? So we made a decision as a management team on what we thought was a very fair offer, and we absolutely support it. And it doesn't mean that another bidder couldn't come into it before the vote on October 27th. But it means that the Cayden shareholders will get to rise with the Agnico share price. So there's really no set price on the deal ever, because it's a ratio, it's a set ratio, and it could go a lot higher than it currently is, and that's something that was important to us because, although we're in the gold market in a bad space, we think it will improve, but we know our shareholders will get the benefits of owning Agnico shares going forward. And I personally am going to hold on to my Agnico shares as long as I can, without obvious needs for money and taxes and whatnot, but for the sake of experiencing a lot more growth. And I think, I think we've done a great deal.
I think you've done a great deal too. I must say, though, when I first looked at it, I was a little disappointed because I thought that longer term that you had a chance for much bigger numbers. But I should mention to my listeners that you managed this, that this takeover was offered to you before you even had a 43-101 resource.
Yeah,
I think that. Yeah.
Go ahead. If you look at the facts there, we got offered $205 million on a company that doesn't have an actual resource, and in a market that's extremely challenging, as I've seen across everyone's portfolio with the exception of Cayden shareholdings the last few weeks even. It's been very punishing, and I think that the deal is a very appealing deal at this stage of the company. Yes, it's hard to let go of the upside, but they're paying for the upside, and they have to get something of what they're paying for. In our previous company, Cayden Resources, we went up to $9 per share, and we weren't as fortunate to sell the company. And the problem with that type of a performance in a company is only certain investors win, the ones who sold at that price. And I'm a very biased investor in companies because I believe in them, and we never know when the perfect time is to sell. You don't know how many ounces are going to be there, and when a takeover like this happens, now you get the opportunity for that decision to be made for you. So everyone is going to win who owns shares of our company. And then the second part of it is, owning shares of Agnico going forward, you'll get a continued win, and that's what made it very tenable for us to consider the takeover, at this stage, and we're happy with it.
Let's go over a little bit what you did at Cayden. Now, you mentioned a $205 million payment for your asset before you even calculated or derived a 43-101 resource. But what did you pay for that property that is essentially the flagship property of Cayden?
Yeah, we paid. We acquired it for an $8 million deal over 3 years and a $4 million work commitment in that time period. And so when we acquired it, turning $8 million as an investment into $200 million, which is really a moving target, but for the sake of the deal, that when we agreed to it, those were the numbers. That's a great return on our investment for our shareholders, and I think that's a very important point to bring up because it wasn't cheap in the markets we were in, but at the same time, neither was the sale price. It was a very fair price for us.
Now, Agnico Eagle, I have to say that it's the only major company that's on my list right now, so I'm a little biased towards Agnico Eagle as well. One of the things that I recall about Agnico Eagle is they've always been very concerned about margins, profit margins, unlike some of their bigger brothers who have really been more I don't really know what their motivations were, but a lot of very egotistical, maybe, to become the biggest gold mining company. And I know the philosophy of Agnico Eagle has always been, well, let's remain profitable. Let's remain as profitable as we can. Forget being the biggest. And so it's a company that I've liked a lot, but clearly, from what you're saying, you must think very highly of Agnico Eagle as well.
Yeah, you know what? I liked them before they approached us in the deal, and it was, as a guy who's building junior resource and speculative investments, you always think about what major would you like to own in your portfolio if you were to go weighted on the major side or the larger companies. And Agnico was on the top of my list before we even had our interaction with them. And, for the points you've mentioned, and they have a relatively tight share structure compared to the other companies. And that being said, they have a very high beta on their share price, meaning they trade with ahead of the market, or they move really well with the market, and that can work for you and against you. But at this point of the market, I think things will get better, so we're headed towards a better market. And to me, I made the comment internally to my colleagues that if we had received a cash offer from a third party, somebody else, I'd have likely, put that cash into investing into Agnico Eagle independent of this transaction. So, it's a really outstanding team that they have, and we've obviously got to experience it corporately, and they have a very, very healthy corporate culture, and I think they're going to have one of the best growth portfolios in the coming years, and that's a big testament to what they've done with their management team, and it's a great company.
Yeah, has been a very successful company. Of course, they just recently agreed to that Cisco deal as well, which will probably allow them to grow very substantially as well, I believe. So,
yeah, I think there's a lot of growth ahead for them, and that's what we're hearing, and I think that's where you want to be, is in a well-run, bigger company. It's got about 6 or 7 major producing mines and or significant mines, and they're headed towards a lot more growth in a market that hopefully is rising in everyone's favor. And I think looking back to their old highs and the higher share prices they've appreciated, if we ever see those $1,500 to $2,000 gold again, I think if shareholders stay long, they'll get a chance to see much higher prices on this deal. And so a great deal with a great company, and they made it very, very good for us and easier for us to negotiate with, getting towards a ratio and getting shares versus cash. I think our shareholders will enjoy the lack of risk and the growth ahead for their shareholders.
Yeah, I certainly believe and am of the mind that having a good blue chip type of gold producer amongst your portfolio of junior shares makes a lot of sense. Well, Ivan, you've had 2 successes already. You're still a very young man. I can't imagine that you're ready to go out and and hang them up and play golf and listen to the birds chirp out on the fairway. I would imagine that you must have some other ideas in mind. You've had 2 successes in a very short period of time. You must have your eyes on some other goals. Or what are you planning to do next?
Yeah, well, that's a great question, and we have a really outstanding technical team, and the whole team of the company is strong. It's an amazing group, and I'd say we have great corporate culture within our team, and the way we work well together and the expertise of everyone on the team is what really drives and gets these kind of results out of our companies. And we're very young as far as the average mean of mining companies, but we'll take a small break, and we're going to go look to do it again. As I said previously to starting Cayden, when we did Keegan, we learned a lot along the way, and we've learned a lot more with Cayden. And I think you're always learning, but your product gets better and better for shareholders. In our group of companies, we have a company right now called Cayden Resources, the symbol's AUG in Vancouver, and my partner Sean Wallace, who's been a partner with me from Keegan through Cayden and everything we've done, he's going to be spearheading that company as a CEO and looking to do what we did with Cayden. The Cayden team is definitely involved, but this will be Sean's turn per se, and I think he's on to a significant, or we are on to a significant acquisition, hopefully by the end of this year, and it'll be something that's district scale and have the opportunity to thrive into what Cayden has, and that's our model, is look for big projects with excellent mining jurisdictions, and something that could potentially deliver, a big end result, being a takeover or a very significant mine. In terms of the rest of the Cayden team and everyone else, once they're back from taking some time off, probably sometime later next year, we're going to be patient, but we're going to look for something really, really aggressive to go after in terms of the exploration business, and we're going to keep going, go look for another major gold mine.
Well, I'll certainly be wanting to keep in touch with you, Ivan, for sure. AUG is a symbol, and so we'll keep that on the radar screen and try to keep up with what you're doing. Before you leave, though, I do have to pass along a comment or two from a subscriber of mine who's also an investor. And his complaint, he says, he raises this question, he says, why is Cayden being sold for a pittance against the backdrop of it's continued excellent drill results and rising share price, even in a crappy gold market? He says, they don't even have, it's not even a single mine, but a district. Has it been shopped around? Have you shopped it around? He wants to know. And does Mr. Bebek realize what this company might fetch when the price of gold turns around again? Now, I think you've sort of covered those issues already, Ivan, but maybe just for the sake of this investor, maybe you would just like to address some of those points again.
Sure, and I think the one word that the investors left out is the word potential, and it's a big word in our company with our asset and where it's at right now. There's potentially a district, there's potentially all these deposits, and the main offer was one that was expected. No, we weren't shopping it around, but you always keep your options open so you can maximize value for your shareholders, and I think the word potential is a fine balance between there being a mine and the word potential. And it takes a long time and a lot of money, a lot of risk to get to the mine. And, you have to make a call when an offer comes on the table. And this one was a very generous one towards the state of the company is in terms of the current market conditions. That would have been hard to turn down. I couldn't see a reason that or where we would be successful turning it down. And and looking at it as a ratio, it made it very easy for us to, what I said before, appreciate a future value. So, I'd ask your shareholder if we end up getting $7 or $8 per share in a turned around bull market when the Agnico share price goes up, was that a better deal for us? And there still is the question: what if this never becomes a mine?
Sure.
Now, and that's a big one. And I think people have to understand there's a fine line and it's a balance. In a tough market and lower market conditions, you're not going to get the premium that you maybe feel you deserve. But getting the ratio, we think, really gives shareholders a chance to enjoy a lot more than the $3.50 we're getting per share today. So, realistically, I think in a year from now, if we see the gold market, I think you're looking at a $5 to $7 share price. I think you're doing a lot better, but have no more risk. And vice versa, if we a year out from now and there's some type of issue with anything from, local communities or Mexico or, world events or what have you.
Sure.
I think that, and I don't suspect any of those things in the near term at all, but if anything can go wrong, then you may be back down to $1 per share. And it's a very valuable or a very important question he asked, and it's something we deal with a lot, but
sure.
I think that the compliments I'm receiving via a lot of other mining companies and people in the space is very, very complimentary, and for me it makes it a lot easier to consider and support this fully is because of the ratio. And I'm going to hang on that a lot because, if you hold your shares for the time you were planning to hold Cayden, you'll get more for them. It's our strong belief.
Well, I have no doubt about that. The bird in the hand is worth two in the bush, as they say, and I don't know how many times over the years I have sort of held out for higher prices and have been sorry after the fact. I'm very bullish on the gold mining sector, ultimately, but your point is well taken. I mean, this is a highly risky business, and when you can run off with a value like that in an established mining company, the shares of which are highly liquid and people can cash out anytime they want, then I think it makes an awful lot of sense. And I want to thank you very much, Ivan, for being with us. We are out of time, but I look forward to talking to you sometime in the near future about your new endeavor, symbol AUG.
Perfect. I will keep in touch, and thank you very much, and thanks to all your shareholders for their support. We very much appreciate it.